Hello, beautiful people. Welcome to another brand new episode of the ITU Forex class. In this week's edition, we're actually going to be talking about why backtesting is a non-negotiable thing, especially for traders who are struggling to be profitable. Okay, so let's say you've started trading or you've been trading for a while, but you can't seem to get the hang of it. You can't seem to be able to make money through trading. You can't seem to be consistent from trading, okay, or get consistent trading results. This particular lesson that we're going to be talking about today should shed a lot of light on a lot of things that you need to do right as you go about trading, okay? So, first things first, what is backtesting? Because the truth of the matter is, I know a lot of traders out there probably don't know what backtesting even is, okay? So let me give you a quick example. Let's use the whiteboard, okay? Just to make it easy to understand. So basically what backtesting is when you test out or try out a trading strategy or a trading approach, okay? Whatever trading approach you decide to use to trade the markets, when you test it out on historical data, okay, to see whether or not it would have been profitable in the past, that in essence is what backtesting is all about. So let me give you an example. Let's say you're trading simple support and resistance. So when price comes to a resistance area, for example, and it forms a, let's say, a pin bar candlestick, that's a candlestick with a small body and a long wick at resistance areas, okay? When this happens, your trading strategy or your trading approach in this particular example tells you that whenever you see a pin bar at a resistance area on the price chart, you just simply sell, okay? Your stop loss goes above the highest price, the wick of the pin bar, and your entry is, let's just, to make it easy, let's say is right below the lowest price of the pin bar. So at the close of this pin bar, you already have the highest price, that's the wick, the topmost wick of the pin bar, and you've got the lowest price of the candle which formed that. So at the resistance area, if this pin bar formed at a resistance area and it closed like this, immediately it closes. Let's say your trading strategy tells you to go short when price breaks below the low of the lowest price of the pin bar and place your stop loss above the highest price of the pin bar. Okay, and let's say you, of course, obviously you're going to do your proper risk management. So let's say however many pips you're risking on that particular trade setup, you're going to do proper position sizing so that it results in no more than 1% of your trading account's capital. So whether the pin bar size, the range of the pin bar from its highest price to its lowest price is 100 pips or 1000 pips, for example. This is just giving you an example, okay? So whether it's 100 pips or 1000 pips, you're going to use a position size calculator to make sure that whatever lot size you're going to place that trade with, you're not going to be risking more than 1% of your trading account's capital on that particular trade setup. And your trading strategy in this particular example always makes it that whenever you risk 1% of your trading account's capital, you have a fixed exit. And your fixed exit is based on risk to reward ratios, okay? So for example, whenever you're risking 1% of your trading account's capital per trade, you're aiming to make a profit of, just to make it easy on this calculation, you're looking to make a profit of 3%. So if, for example, the trade setup you identified, from your trade entry to your stop loss for that particular trade setup is 100 pips, then after you've done your position size calculation and everything and you've placed the trade and price action ends up triggering the trade, your profit target is going to be at least 300 pips. Because if you're risking 100 pips, which somehow, because of position size calculation, which somehow translates into 1% of your trading account's capital, okay, on that particular trade setup, then for you to be able to make 3 times what you're risking on the trade, you need to aim for a profit target which is 300 pips. Likewise, if the trade setup for this particular example was this, again, I emphasize that this is just an example. This is an extreme example to drive home the point I'm trying to make here, okay? So let's say you're risking 1000 pips and you've done your position size calculation so in such a way that the 1000 pips you're risking, it's not more than 1% of your trading account's capital. Okay? So in this case, you've done your calculation and you're risking 1,000 pips, which again, because of position size calculation, makes it that you're risking no more than 1% of your trading account's capital. Well, if you're still to go by your trading strategies exit rule, this example trading strategy we're using here, then you need to go for a profit of 3 times that 1,000 pips, which in this case is going to be 3,000 pips. Okay, that's the only way that you're going to get three times what you're risking on this trade for that particular trade setup. Okay, so let's say these are fixed, these are constants for us. Now the thing is, I could give you a trading strategy like this, and maybe it worked for me in the past, but there's no way for you to know. So before you can just take this trading strategy from me and blindly go out there to trade with it, you actually need to verify that what I'm trading with or what I just gave you actually works before you can put your hard-earned money on the line to trade with it. And that's just common sense. I mean, somebody cannot just introduce you to a business and tell you that, okay, this business just works, and there's no track record, there's no papers to show you anything about this, and you just take that person's word for it. Even though you might trust that person that much, doing your due diligence to kind of work out that this thing that this person is actually saying is true is just common sense here. Okay, so let's take it a step further. Okay, let's say I give you this trading strategy and I tell you that these are the rules of the trading strategy, but then I show you no proof of it working, or maybe I even tell you that it works for me. But for you to be able to trade it in the future with conviction, you actually need to do the work. And that's where backtesting comes in, because now if you were to take this strategy and trade in the live markets, I even say you're doing the smart thing by not immediately trading with real money with that trading strategy. You're trading on a demo account. For example, if you're trading, if the strategy is a swing trading strategy, for example, and let's say you're trading the higher time frames, something like the 4-hour time frame or the daily time frame, before you would be able, especially if you're trading only one currency pair, before you'd be able to take something like 100 trades to properly validate the performance of the trading strategy, is going to take you a very long time, because by nature of it being a swing trading strategy, before you get like 100 trade setups, especially if you're only trading one currency pair, then it's going to take you, let's say you get 1 or 2 trade setups a week. Even at that, it's going to take you almost 2 years to get like 100 trade setups. Okay, so in this case, it's going to take you 2 years of demo trading just to prove that the trading strategy works. Before, after doing that, then you now start trading on a live account with, a small live account before you ease in and scale your trading capital. It's just going to take you a whole lot of time to do this. But if you were trading with a backtesting software, for example, because it is historical data we are talking about here, you can download years of historical data, and then within minutes you'd have it on your computer, and with that you can actually trade through those years of historical data within just a couple of hours or a couple of days, depending on how committed you are. So you might breeze through something like 5 years of historical data, or using your trading strategy to test it out, okay, within just a couple of days. And that's invaluable information. That's one of the reasons why backtesting is so important, because you're going to get so much experience by trading on historical data, which simulates what would have happened if you use the same trading strategy within a live trading environment. Okay, so I hope you get the point here. I hope you get what the point I'm trying to pass across. Okay. Now, that said, you can see already, if you take a step back to think about what we just talked about, this should make it crystal clear for you that this is one of the reasons why traders who are struggling to become profitable are not profitable, actually, because most of them will not take the time to do this groundwork, this foundational work, which is required for them to become profitable traders. Because for most of the traders out there who are struggling to be profitable, they don't even have a trading strategy to begin with. Talk more of taking that trading strategy and testing it to see if it's even a profitable trading strategy to begin with. Most of them would either be following signals from some of the mentors they have there, or coaches, or whatever have you. And the problem with following trading signals is that if you don't know the trading approach or strategy behind that signal, it's going to be very difficult for you to stick with it. Let me give you an example. You see, whatever trading strategy you decide to use to trade, it is inevitable for you to trade that trading strategy without going through losing or winning streaks. What I mean by losing or winning streaks is there are going to be points in time when your losses from taking trades using that particular trading strategy, whether it's a profitable trading strategy, is not the question here. There are going to be points in time where you're going to get clusters of losing trades and clusters of winning trades. That is just inevitable. Just like you would have winning trades with a trading strategy that works, you're also going to get losing trades. So it's not out of the realm of reality or possibility for you to have a trading strategy that has something like a 40% win rate, but it's profitable because of, the risk disposition. Maybe whenever you risk, you only risk 1%, and whenever you make profit, you make like three times what you're risking. With that particular kind of trading strategy, let's say you take 100 trades with it and it has a 40% win rate. In that case, that 40% win rate that the trading strategy has, you've taken 100 trades with it, 40 trades are going to be winning trades, and the remaining 60 trades are going to be losing trades. Now, in this case, if whenever you lost, you only took a loss of 1% of your trading account's capital. So, in this case, your gross loss will be around 60%. That's your gross loss. But what about your gross profit? Let's say whenever you won a trade, it gave you a profit of 3%. So in this case, you would have made a gross profit of 120% of your trading account's capital. Now, in this case, when you subtract your gross loss from your gross profit, you would still be left with a net profit of plus 60%, even though your trading strategy only had a 40% win rate. Now, this is a profitable trading strategy. But the thing that most gurus will not tell you is the reality of trading is that since you took 100 trades with this trading strategy and it only had a 40% win rate, out of those 100 trades that you took, there were points in times where you might even have had 1 losing trade, 2 losing trades, 3 losing trades, 4, maybe even 6 or 7 losing trades in a row. The problem is, if you were following a trading signal of a trader who is profitable, by the way, but is using this trading strategy to trade, when he would have dropped this first signal for you to take, and you took it and you found out that, okay, this trade is a losing trade. He dropped the second one, a losing trade. The third one, a losing trade. By this point, a lot of the people who are following these signals blindly are usually going to either dump it or start saying that, okay, you know what, this guy doesn't even know what he's doing, the strategy doesn't work, blah, 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 and all of those things. And guess what? Let's even say some of them are even a lot more patient. They continue taking these trades. They continue taking this trade up until the time that they took the 7th losing trade. And if they were not even practicing proper risk management, they would have blown their account. But let's give them the benefit of the doubt and say they were practicing proper risk management here. But then when they reached the 7th trade, they just lost all confidence in this person. Okay? And at this point, they refuse to take any signal that he posts. And let's just say it so happens that just when they stopped taking the signal that he posts, he had a back-to-back set of winning trades, 3 back-to-back winning trades. Now, in this case, since he's trading with a 1:3 risk to reward ratio, let's say these 3 winning trades that he took, he risked 1% as usual, but all of them gave him a profit of 3% each. Now, in this situation, remember, the 7 losing trades that he had back-to-back, he was risking 1% of his trading account's capital. So he was only down minus 7%. Okay? But then the 3 winning trades that he had back to back, because he was risking 1 to make 3, they gave him a profit, a gross profit of plus 9%. So at the end of the day, when you subtract the gross loss from his 7 losing trades, from the gross profit that he made from only 3 winning trades, he is still in profit by around 2%. But the problem is, for somebody who is just blindly following this guy, not knowing his trading strategy or not understanding why he's trading the way he's trading, they would have even stopped following his signals long ago. Okay? And so they will not even have had the opportunity to make back their losses. So this is just one example of why you don't just want to blindly follow a trading strategy or a trading signal without you doing the proper groundwork that's required, which is for you to take that trading strategy through a test drive and see how it performed in the past. Okay, it's a profitable trading strategy, but when I took 100 trades with it, what was its win rate? What was its risk to reward ratio? How often did it have clusters of winning and losing trades? What was its maximum loss? What was its maximum profitable trades? And all of you need this information. And this information, I'm saying you need it, is not just you needing this information for the sake of it. No, you need this information because when you go to the live market, you're going to be faced with all types of situations in the market because trading is a game of probabilities and you're going to be faced with uncertainties. And so you need this data to serve as a benchmark so that when you go through those trying times, you can go back and look at the data and see, okay, what I'm going through now, I just had like 5 losing trades in a row. It's not uncommon because this trading strategy, in fact, for the past X number of trades that I took during the backtest, there was a point in time that it had like 10 losing trades. So what I'm facing now is not out of the ordinary. And even though, in the past it had something like, when I was backtesting, this is an example I'm giving you, it had like 10 losing trades in a row. Because of its proper risk management and its risk to reward ratio and dispositions and all of those things, it ended up still making money. And so I don't need to change anything here. I just need to stick to the plan and continue trading with relentless discipline, as I always do. And that's that kind of confidence. You can only get it when you backtest the trading strategy you're using. Okay? So, now that you understand why backtesting is so essential, let me walk you through an example, okay, of a trading strategy's backtest result to help you see what this would look like in reality. Okay, so this is the backtest result of one of my trading strategies. In fact, not just one of my trading strategy, but one that I've talked about countless times in this ITU Forex classes, which is the advanced trend trading strategy, where you place a trade. It uses multiple time frame analysis. You can go to the previous classes. I've talked about it in depth in those classes. Okay, so it uses the daily, 4-hour and 1-hour time frame to identify the direction of the trend on the higher time frames and then trade in the direction of that trend using the lower time frame charts. Okay, so for this particular backtest, we took 210 trade setups with it, but pay close attention to what we have here. Its win rate after taking those 210 trades, I keep telling you guys in these classes, and this just makes it crystal clear, okay? Its win rate is less than 50%. And I've told you guys not once, not twice, that my go-to trading strategy, the win rate that it has is much less than 50%. In fact, I lose more times than I win. But because I use proper risk management, because I understand that trading is a game of probabilities, you're going to win some, you're going to lose some, but you need to remain disciplined and stick to the plan. Eventually, I still end up being profitable because of this. Part of the reason is because of the grace of God, obviously, and having a strategy that has been built from the ground up to make the numbers play out in my favor. Okay, so moving on, you can see that at the end of the backtest session, the strategy ended up making a profit of around 58% of this trading account's capital, the accounts that we used for the backtesting. In this particular situation, I took around 120 long trades with it, and the remaining 90 trades were short trades. Remember, the total trade setups we took with this trading strategy was 210 trades. Now, when you pay close attention to this number here, you'd see that even though the trading strategy made profits, there was a point in time that it had a marked consecutive losing trades of around 7 trades. So that number that I was telling you earlier on, that you might have 7 losing trades in a row, I didn't just take it out of nowhere. This is from experience. Okay, so the trading strategy that you can see that it made profit, but there was a point in time where it had back-to-back losses 7 times. Now, be honest with yourself. If you are trading with the trading strategy that someone gave you, for example, and you've not back tested it, and you took, let's say immediately that person gave you that trading strategy, or let's even scratch that. Let's say that person gave you that trading strategy and the first 2 trades you took with it were winning trades, and you were, on top of the world, feeling like you've cracked the markets and all of that. But then after those 2 winning trades that you took, the next set of trades that you took, 7 of them all turned out to be losing trades. Be honest with yourself. If you didn't backtest that trading strategy to see that this is a normal occurrence in the strategy's performance, would you be confident enough to continue trading with that trading strategy? Most traders wouldn't, because they just don't have it in them to continue because they would look like the strategy is a losing strategy. So because it gave them losses, which at the end of the day, losses are part and parcel of trading. Let me tell you something that would save you a whole lot of stress. If you know that you are not one to be acceptant of losses, okay, in trading, then trading might not just be the business for you. To be 100% honest with you, if you know that you hate losses and you just can't stand taking losing trades, trading might not be the business for you, because the earlier you come to term, you make peace with the fact that you cannot escape losses in trading, the better your trading is going to become. Because when you accept that you cannot escape losses in trading, that's when you start taking risk management important. That's when you're going to understand that trading is a game of probabilities, and then you're going to play that probabilities in your favor. That's when you're going to start thinking in sample sizes of trades, not just making all of your trading career depend on the outcome of a single trade or a single a couple of trades in a row. Okay, so you really need to come to terms with the fact that losses are inevitable in trading. So moving on, you can see that the other stats of this trading strategy, obviously, since this is a swing trading strategy, the backtest started from all the way from August 2018 and it ended around March 2023. Okay, now when we move on to the next tabs of the trading strategy, this is what its equity curve looks like. You can see that overall, its equity curve was going up. It was going, moving to the upside, which is a good thing. I think the dark mode is a little hard to see, so let me turn it to light mode. So, which is a good thing overall, but pay close attention to the fact that it wasn't just smooth sailing. There were points in times where you'd have a couple of losses, just like I told you, and then it will recover, and then there will be a couple of losses, and then it will pull back. So it's just like the market structure of an uptrending market that I keep telling you guys. It's going to move up a bit, pull back, move up a bit, pull back, but then overall it's moving to the upside, which is what we want to see with an equity curve of a trading strategy. Okay, this is typical. Now, pay close attention to what we have below this equity curve. It's showing us the monthly P&L. You see, there's one very big misconception with especially new traders in this industry. When they get into trading, they assume that trading is like your regular 9-to-5 salary job. So they have that, I don't know where we get that mindset. Or maybe it's because of our familiarity with the usual traditional 9-to-5 jobs. People take that and come to the markets with it, thinking that when you're making profits through trading, or when you're a profitable trader, each and every month you're going to be pulling out profits from the market, like a certain number of profits. So let me give you an example. Let's say like $10,000. Let's say you have the capital to be able to make that type of profits, for example. Okay, most people who are starting to trading, who are inexperienced with trading, the results of trading reflect, they would think that they would be making that $10,000 each and every month without fail. That's how it goes, regardless of having winning or losing trades. They just feel that, they think that, okay, and wrongfully so, they think that each and every month they're going to be making that $10,000 without fail. Trust me, if you could do that, you'd be richer than Warren Buffett in just a couple of years. Okay, because that's not how trading works. The truth about trading is that, and one of the biggest distinctive factors qualities between trading and a regular salary job is that with a regular salary job, your salary is actually fixed. It's not volatile. So if when you signed up for the job, you were earning, let's say, $80,000 or whatever the amount is per month, you're going to be earning that amount each and every month without fail, as long as you remain with the job. Okay? But in trading, in fact, there are times when you'd not make money at the end of the month. You might have done everything right, followed your strategy the way you're supposed to, did proper risk management. You've done everything right. You didn't break any rules, but then you still end up losing money. And that is 100% normal in trading. You see, even though the equity curve of this trading strategy was moving up and it was profitable, look at the monthly P&L that the strategy had. There were months where it made money, then there were months where it lost. and it lost and it lost. Then there were months where it made a serious ton of money, and there were months that it lost. There were months that it was at break even. There were months that it made just little to pass by. That's the typical way that a trading strategy's result looks. So don't let anybody fool you in this industry by telling you that when you start trading, when you use their strategy or you use their method or whatever, each and every month you're going to be making money. That's not true. That's not how trading works. That's one big distincting factor between trading and regular salary jobs. Okay? So please don't let yourself be bamboozled by this. I say all this to say, you need to make sure whichever trading strategy you're going to put your money behind to use and trade the markets, you have properly tested it and proven to yourself that it actually works. If you've not done this, then you're doing yourself a disservice, because at the end of the day, when the going gets tough and you start encountering losing trades, which is inevitable, by the way, you are usually most likely going to either want to dump that trading strategy and look for the next one. And if you do this, you're just going to keep running in circles, because there's no strategy out there that is going to give you winning trades 100% of the time. And so when you dump one because of a losing streak and go to the next one, trust me, that next one is also going to give you a losing streak, and you dump it and go to the next one, and you keep doing this over and over and over again, and you'd never experience what true profitability from trading is, which is, there are months that you're going to make a lot of money, even with a trading strategy that is profitable, and there are months where you're going to lose, and there are months where you're going to be profitable, and there are months where you're going to be break even. All of these things, you need to accept this and make peace with it for you to be able to make money through trading profitably. And so the first step to doing that properly is to pick a strategy that you resonate with and then test it on historical data to prove to yourself that it worked. And even if it worked in the past, that's not guaranteed that it's going to work in the future. I'm telling you all of this because most gurus, most mentors are not going to tell you this, because it's the truth with trading. Even if your trading strategy worked in the past, there is still the probability that it might not work in the future. And this is all of the reasons that makes it that you have to be trading with money that even if you were to lose it, by doing all the right things, you're not going to be on the streets because you traded with money you can't afford to lose. And so trading is something that you need to do with money that even if you lost, it's not going to change your lifestyle. Okay, so please take note of all of these things. They're very important, and you really need to do this the proper way for you to be able to enjoy it at the end of the day. So once again, thank you for taking time out of your busy schedule and making it to this class. I sincerely appreciate you taking time out of your busy schedule to attend these classes and to be as interactive and cooperative as you are. I look forward to seeing you guys in next week's edition of the class. But before we wrap up the class, I'd like to use this opportunity once again to invite you guys to test out our ITU suite of bots, which are expert advisors or robots which are designed to help you trade on your behalf and help you to start earning while you're learning how to trade. Again, we're not promising you overnight riches here. We're not promising you, you making money every single month, because that's not realistic. That's not the reality of trading. But if you're interested in what true trading is, then please reach out to us on any of our social handles, and we'll be more than happy to assist you, walk you through how to set everything up step by step, and get you up and running in no time. Once again, I look forward to seeing you guys in next week's edition of the class. Have a wonderful rest of your week, and God bless you all. Cheers.